Hello, guys, and welcome back to another episode of the MD Investor, the channel where we take personal responsibility for increasing our financial IQ so we can break the cycle of generational poverty. If this is your first time, welcome. It's a channel where we educate ourselves. If you're regular, welcome back. You already know what we do. If there's people out there you think could benefit from this type of information, send them a link, let them know about MD Investor. But let's get right into it. Today's episode is going to be all about custodial accounts. Now, these are accounts for the benefits of minor children, or the benefit of minor. These are accounts that I came across maybe recently, but I wish I would have known about them many years ago. Okay? So, what are custodial accounts? Custodial accounts are basically investment accounts for the benefits of minors, children. So I did a video years ago about don't open a bank account for your child, open a brokerage account. And this is what I was alluding to. Because these accounts, you're able to have assets such as stocks, ETFs, mutual funds, all the regular assets that you as an adult could own. You can own them for the benefit of your minor children in an account. Couple of terms you'll come across when you are researching about custodial accounts. You'll come across owner, beneficiary, and custodian. Let's go through them one at a time. Owner. Who's the owner of the account? The owner of the account is the minor child, right? You know, I have a custodial account for my children, and the first name on the account is the minor child, right? My name comes after as a custodian. So the owner of the account is the minor child. The beneficiary of the account is the minor child. The custodian is the adult. And the custodian does not only have to be the parents. Grandparents can open a custodial brokerage account for their grandchildren. Aunts, uncles, neighbors, friends, any adult can open a brokerage account for a minor child. You have a niece, you have a nephew, you have a goddaughter, godson, you can open a custodial account for them. So that's pretty cool. All you need is the basic information that anybody would need. Social security, name, address, all that stuff. But any adult can open a custodial brokerage account, okay? So while you're doing your research, you will come across a couple of terms. You'll come across the term UGMA, which stands for Uniform Gift for Minors Act. Uniform Gift for Minors Act, UGMA. And you will also come across the term UTMA, Uniform Transfer for Minors Act. Essentially, these are the two main types of custodial accounts. And these are the acts that were recommended by the National Conference of Commissioners on Uniform State Law in 1986. Basically, they had this commission and they recommended these acts, because an act is basically this recommendation and it does not become law until they vote on it. They recommend these acts to the states, and the states, of course, have the right to accept or deny. All of the states ratify the UGMA. So you can open a UGMA account, UGMA custodial account in all 50 states. The UTMA, Uniform Transfer to Minors Act, was ratified by all states except for South Carolina. So you cannot open a UTMA brokerage account in the state of South Carolina. Now, let's talk about some similarities and differences for the UGME and the UTME. They have a lot of similarities, but there's a couple of differences. So let's talk about custodianship. We said the adult that opens the account is the custodian, and they're the custodian until the age of majority. The age of majority varies in each state. For most states, it's anywhere between 18 and 21, but that's the age where the state considers the minor child an adult. Up until then, the custodian, the adult, the opening account, is in charge of making the financial decision, make sure the taxes are paid. But when the child reaches the age of majority, the child, who's now an adult, takes over the account. In both UGMA and UTMA accounts, the custodianship ends at the age of majority. Okay? UGMA and UTMA differ in that UGMA, you basically can hold within those accounts the basic financial instruments, stocks, mutual funds, bonds, ETFs. Those are what you could hold in a UGMA custodial account. So a UTMA account is different because you can hold all the traditional financial instruments that you hold in UGMA. In addition to, you can also hold real estate, intellectual property like patents. You can also hold fine arts, precious metals, and even shares in a family limited partnership. So the difference between the UGMA and UTMA is that the UGMA is more the traditional assets, stocks, bonds, mutual fund, ETF, and the UTMA can hold those traditional financial instruments in addition to property. So yeah, you could own like a real estate, you could own intellectual property, so you could own patents, fine arts, precious metals, and shared in a family limited partnership. And you could own UTMA accounts in all states except for South Carolina. Now, let's talk about taxes. The form that you would have to fill out if taxes are incurred on the account is going to be Form 8615, which is basically the form for unearned income by certain children. Form 8615 is a form you fill out for children that earn unearned income, which basically means they didn't work for it. So these are income from their investments in their custodial account, from interest, dividends, and capital gains. The great thing about custodial account is that the first $1,100 of unearned income earned from the custodial account is tax-free. The next $1,100 will be taxed at the 10% tax rate, right, for the children. It could be lower. In our red rate, it could be 0. So essentially, the first $2,200 of unearned income from the custodial account will only be taxed at, the first half, $1,100, is tax-free. The second half, maybe only up to 10%. Anything above the $2,200 will be taxed at the owners, usually the parents, but at the owners, the custodians, their tax bracket. And the reason they added that second part about anything over $2,200 will be taxed at the owner's bracket is because to prevent custodian owners from giving all this money to children to kind of shield them from paying tax. That's why that's done. Other thing I'll mention too that doing your research, you're going to come across something called the gift tax exemption. The government, the IRS said you are able to, as an individual, gift up to $15,000 per year per person. So if you have one child, you can gift them $1,500, $15,000 a year. $15,000 a year and pay no tax. If you're a couple and you file jointly, that's $15,000 each. You can gift $30,000 per child, tax free. Obviously, you have two children. Individual can give $15,000 each. Okay, so that's something you want to keep in mind. Anything above that, then you have to fill out a special form to pay taxes or anything above that. But obviously, most people won't be exceeding that amount. Can you withdraw money from a custodial account, right? The account is set up. Can you withdraw money? You can withdraw money from a custodial account, but the caveat is that it has to be it should be for the benefit of the minor child. So you can withdraw money from the custodial account for tuition at a private high school. That's acceptable because it is for the benefit of the minor child. These are the things that you're going to want to do your due diligence and research at the brokerage house that you're thinking about setting up the custodial account, because every brokerage house is different and you want to see what are the limitations are. You don't want to open an account and then find out there's certain limitations that you didn't really anticipate because you didn't do your background, you didn't do your homework. So yes, you can withdraw money from the custodial account for the benefit of the minor child. What happens to a custodial account when the child turns 21? When the child turns 21, that account essentially belongs to the minor child who's now an adult. So let's say, for example, in New York State, let's say the age of majority is 18 for a UGMA account. So when they turn 18, that account is here. They can do with it as they wish. If it was your idea for them to use this account to go to college, and they decide they're not going to go to college, and they're going to use it to buy Yeezys or cell phone or take a vacation, they can legally. Which gets me to the other point. A custodial brokerage account is an awesome tool for wealth building, because unlike a saving account where you're getting nothing in return, you can actually invest in assets, right? You can invest in assets and the compound interest will be great. So somebody is planning on starting a family, they can open a custodial brokerage account when the child is born. Think about that. They can actually probably start saving the money before the child is born, dump the money in the custodial brokerage account at birth, and then begin to fund it, and let that money grow. You can see how this money can grow and compound over the year. A custodial brokerage account is an excellent vehicle, not only to invest, but to teach your children about investing. Okay? So this is a vehicle where you can kind of think about and talk to your children when they get of the right age, become teenagers, about even before teenage years, maybe 8, 9, 10 years old. What are the goals of this account? Sit and talk about it. What are the options that we can invest in? We can invest in an index fund, individual stocks, bonds, what other type of returns we're going to get. We can go over the quarterly statement. Every quarter when we get the statement, we can sit down and look and say, okay, this quarter our account was down. And then explain to them about what that means and actions that can be disastrous, like selling a down investment. If you expect it to return to increasing value soon. So it's a great opportunity to talk about return on investment. Okay? Index funds, stocks, mutual funds is a great opportunity. Okay? So the custodial brokerage account, excellent strategy to talk about, right? We talk about exactly what they are in this video. We talked about the definition of the owner, the beneficiary, and the custodian. We talk about the two main flavors of custodial account, which is the UGMA and the UTMA. Talk about the differences. We talk about some of the similarities and differences about those two types of accounts. We talk about the tax implications of custodial accounts, and we talked about the fact that we can withdraw money from them for the benefit of the child, and we talked about what happened when the child reached the age of majority. We're gonna stop the video there, but if there's people out there you think could benefit, let them know about the MD Investor. We do videos like this every week. Let's try to increase our financial IQ, information that we're not getting in school. Definitely subscribe on YouTube at MD Investor, and I will see you on the next one.